We got a fun video today. I'm going to go over quotes from famous investors. Now, these are investors that have been very successful in the stock market, making millions and billions of dollars. It's always good to, get advice from people who have been successful in something you're pursuing. And so today, that's what we're going to go over. We're going to go over 12 quotes from famous investors. And so I think this is a video that you can revisit if you're ever becoming doubtful or fearful to kind of get your head back in the game. And so I really think that today's going to be a lot of fun. Also, if you're new to this channel, please subscribe. I provide a diverse set of content. It's quality. I'm always improving. I'm transparent. So I just would really appreciate it if you join this journey with me. And thank you to those who are subscribed. I really appreciate you guys. So let's get started. So the first investor is going to be one of the most famous ones, and that is Warren Buffett. Now, he's the CEO of Berkshire Hathaway. He's had so much success in the stock market, but his title is "Don't be a follower." And his quote is, "I will tell you how to become rich. Close the doors, be fearful when others are greedy, and be greedy when others are fearful." What this quote is mainly saying is, a lot of people invest or buy stocks at the wrong time, either because they're buying them at high valuations when everyone is greedy, or they're selling when people are fearful, and quality stocks are at great valuations. So you really have to study the market and be like, wow, it's very fearful right now. And a lot of my companies that I'm very bullish on, that I love the fundamentals of, are at very inexpensive valuations compared to what they've been in the history. That's the time to buy. And I think that's what we've seen so far this year. So I love this quote, and I think it's a good guide on buying stocks and when. The next one is from Peter Lynch. Do your homework. So his quote is, "If you don't study any companies, you have the same success buying stocks as you do in a poker game if you bet without looking at your cards." And man, is this true. If you do not learn how to study the stock market, learn the different terminology, learn how to value a company in different measurements and different ratios and things like that, you need to expand your knowledge when you get into the investing game, because there's a lot out there to learn, and a lot of it is excellent information. So I really love this. You can't just be somebody who goes off of somebody else, because to me that you're not an investor if you're doing that. You have to learn your own way. You have to be your own person. The next quote is from Robert G. Allen, titled "Thriving Investors Don't Play It Safe." So his quote is, "How many millionaires do you know who have become wealthy by investing in savings accounts? I rest my case." This is very true. The big banks pay like a 0.01% interest rate no matter what the economy is doing. And the high yield interest savings accounts, they're better, but they're still usually do not even come close to beating inflation. So you're really losing value in your money just setting it in a savings account when you could be investing in the stock market, making long-term wealth. Study the stock market, look at the charts, and you'll see that over time, it always recovers, it always goes up. So I love this quote. Fourth one is John Neff, looking for the hidden gems. His quote is, "It's not always easy to do what's popular, but that's where you make your money. Buy stocks that look bad to less careful investors and hang on until their real value is recognized." Now, there's a lot of stocks, and we'll use Tesla as an example, that early on, a lot of people were making fun of. They said electric cars would never be a thing. But those certain people that saw this as a hidden gem, realized its value, were able to get into a company that has gone up thousands of percentages in its stock price. So it just goes to show you, you have to educate yourself, like the last quote, and then you can see the real value of companies and know when to, when you see when you see something that, wow, people really aren't thinking of this, the general public that really don't have, that time put in to learn about things, and you're going to find some really great hidden gems. The next one is Philip Fisher. "Don't confuse price with value." So his quote is, "The stock market is filled with individuals who know the price of everything but the value of nothing." People will see a stock price. Let's take Google. It's over $1,000, and they're like, "That's too expensive." But that's not how you value or measure stocks. You have to look at all the fundamentals of it. And some people will just focus on that. You even have to look beyond that into the value of it. What is this company doing to innovate, to grow? Is it buying back shares? There's so much to stocks that when you learn and educate yourself, you're going to be looking more at the value of it than the price of the stock. And you're going to make money that way. And I just guarantee that. The next quote is from Sir John Templeton. It says, "Look back and go forward." His quote is, "The four most dangerous words in investing are, 'This time it's different.'" I think this quote is good because a lot of investors say you got to look forward thinking, but it is important to look at the history, right? Look at the different cycles of the market, understand the trends, and it's going to help you better invest in certain times of, recessions or crashes or who knows what. You can use the past as kind of a guide for the future. So I really do like this and think it's something important to do. The next one we will talk about is John Bogle, "Know Your Limits." His quote is, "If you have trouble imagining a 20% loss in the stock market, you shouldn't be in stocks. You have to have a strong stomach when you invest. If you can't deal with that, then yes, investing probably isn't for you." You look at this year, a lot of good quality companies dropped 20 to 50+%. All I see is good buying opportunities, but some people got fearful and they sold out and they lost a lot of money because those stocks are now climbing back up. It always recovers, but those that get fearful are going to lose money. So you have to understand that there will be, times where your portfolio is down quite a bit or even in the red, but you have to keep your mind on that and your sight on that long-term goal. The next one is Benjamin Graham, "It takes work to move beyond mediocre." So his quote is, "To achieve satisfactory investment results is easier than most people realize. To achieve superior results is harder than it looks." So, it just is kind of, you have to put the work in. Anybody can, go off of a few big time investors, see a stock or two that they're investing in and put their money in. But when you actually put a strategy forth based on your own your own strategies, your own convictions, you're going to do better than just going off of somebody else. Because I don't care how smart someone is, they can't predict the market. They do make bad decisions. So you have to recognize the distinction between investing and investing well. And so that just goes to show you just got to expand your education around these things. The next quote that I really like is from, again, Warren Buffett, and it's "Stop overthinking it." So he says, "If you have more than 120 or 130 IQ points, you can afford to give the rest away. You don't need extraordinary intelligence to succeed as an investor." So the last quote was, you got to put the work in, but this quote is to solidify that doesn't mean you have to be the smartest person in the room. It just means you have to be disciplined, you have to be patient, you have to invest in quality companies, you have to educate yourself, and you're going to do really well in the stock market if you can do those things. So don't let the fear of the stock market thinking, "I'm not smart." You are smart. You just got to take the time to sit down, learn some things, and start getting that will going of investing. And you're going to make some mistakes. We all do, but you're going to learn from them, and that's how you keep getting smarter and growing your money more and more. So the next one is Charlie Munger, "Less really is more." His quote is, "All intelligent investing is value investing. Acquiring more that you are paying for, you must value the business in order to value the stock." So it's, good investing is all about figuring out an investment's true worth when everyone else around you doesn't seem to recognize it. So it kind of goes back to my Tesla example. You got to realize that there's a lot of common sense, I think, that goes into certain companies. People become fearful or jump on a bandwagon, but if you sit down and think about it, put a little bit of effort into it, you might find that some stocks are at great valuations and other people just aren't opening their eyes to it. So I really like this one. Okay, we're down to our last two. So the next one is from Bruce Kovner, and it's "Take your feelings out of the equation." His quote is, "The emotional burden of trading is substantial. On any given day, I could lose millions of dollars. If you personalize these losses, you can't trade." I love this quote because I think investors get so emotional, they make bad decisions. They'll sell, pull out their money at the worst times, and buy stocks at the worst times because your emotions get into it, and you don't use your head. There's going to be times where your portfolio is down, and if you let the emotions get involved, you might sell out at the bottom, and then you might have to buy in at the top, and you're going to lose out on a lot of money that way. So take your emotions out of it, out of the decision-making process. Now, the last quote is from Carlos Slim, and it seize the day. His quote is, "Anyone who is not investing now is missing a tremendous opportunity." This is so true. And, I think people are fearful of investing. They think that if they put money in, they're going to lose all their money. And you can, if you don't, go by some of these quotes and advice that, I'm giving and I'm sharing. Because really it comes down to you just have to be disciplined and patient. You just have to get started. You just have to get that wheel turning. And you're going to create tremendous opportunities when you aren't fearful and you're willing to take risks and do things that, are going to just kind of take yourself out of your box. And that's just always a good thing. So I want to kind of end this video with a bonus quote from myself. I kind of thought, what would be my quote? And this is my quote. It's, "Be yourself, be patient, and put in the work." So be yourself. You have to be an individual. You can't try to mimic somebody else or copy somebody else, because then you're not going to be a good investor. You're not going to learn how to think for yourself. And at the end of the day, you're just going to be a follower. And that's not a good thing to be. You want to be an investor. You want to actually get out there and have, it's actually a lot of fun to have your own convictions and your own strategies about stocks. It just feels good when you buy into them. But if you're copying somebody else, or you're not being yourself, then you're not gonna make money, because then you're not investing from truly your own perspectives. Then be patient. This one I can't kind of tout enough. You have to have that discipline to just sometimes sit back and just let it ride, because when the stock market goes down like it has this year, if I would have sold out at the bottom instead of being patient and realizing, hey, it will go back up, it will rebound due to XYZ, it's the US economy, these companies work 24/7 to grow their earnings and innovate and all that stuff. When you really put the thought into it, just be patient. Things will turn around, and you have to take your emotions out of it. It goes underneath being patient, because that's going to just make you to make bad decisions. So always step back and look at the big picture, and that's going to help you. Be patient. And then put in the work. Nothing is going to come to you by just sitting around and doing nothing. That's never worked. Some people complain and say, oh, I'm just waiting for it to happen. It won't happen that way. You have to go out there and get it and grab it yourself, or else you're never going to be wealthy. You're never going to get into shape. You just have to put in the work. You have to get started. Don't be fearful of getting started. That's all it takes. That's probably the hardest part, honestly, about anything in this world, is just getting started, because you're going to teach yourself, you're going to learn, and you're going to grow, and you're going to create opportunities for yourself that you could have never imagined. So I'm going to end it with my portfolio. At the end of 2021, I was at a 23.29% in the green growth, right? During these last couple months, the lowest point I got to was 9%. So my portfolio dropped quite a bit. But I didn't let the fear take over. I was willing to be patient. I was willing to have faith in myself, why I'm investing, what I'm investing in. And I've put in the work, so I wasn't going to flush that all down the toilet just because I let my emotions get involved. So now my stock portfolio is back up over 12.2%. So I'm making money again, and these percentages are all more than inflation. I'm beating inflation regardless. And even if it went into the red, let's say the worst happened, that wouldn't stop me from investing, because I have a long-term goal. I'm putting in the work. I know that will create a good outcome. So, for all of you out there, I hope these all help you to grow, to think of things differently, and to make some better decisions. It has for me. So with that said, thank you guys for joining, and I hope you guys have a great day, and we'll see you next time on Mark's Finance and Fitness.